I guess the biggest takeaway that we can see from earnings season thus far is the observation that earnings are not coming in on the aggregate below where they were last year and last quarter. There was certainly a fear coming into this earnings season that that earnings were going to be S&P earnings on a weighted basis were going to be negative, and that's so far not the case. They're essentially flattish, slight positive. That in and of itself, by the way, do not get too carried away over, and here's why. The market rallied dramatically despite expecting earnings to be down this quarter. So obviously, whatever fear the market might have had about a bad earnings season was really pretty much put behind it, because essentially we've seen more or less 4 straight months of ever higher markets. And so, markets being a discounting mechanism, we're already looking through that number. I think also the second thing the markets were looking through was the ability that companies have to guide lower so that they can beat. I know that sounds conspiratorial. I have heard from analysts over the years of certain companies basically, telling analysts that you really don't want to be raising your numbers, or you may be coming in a bit high, and the analysts would be a little conservative, and then lo and behold, the company came in with the number that the analyst was probably looking for in the first place. But this way, it's always better to beat expectations than match them or God forbid, miss them. And so a certain amount of that is understood by the market. So realistically, if companies are not beating their expectations by a certain amount, they're kind of not doing their job. We have seen that. Another takeaway is people are being a bit judicious. Investors are being somewhat judicious about how they're looking at companies. On Tuesday, we saw very different reactions from Seagate and Western Digital, 2 companies that occupy basically the same space. And yet the market really liked the results from one data storage company and not so much the other. Seagate up, Western Digital down, and that's sort of a healthy discrimination that the market has. Is let's see who's performing, let's see who's not. Let's not be indiscriminate and just buy everything that beats by a certain amount, or sell with blindfolds on, just sell the panic sell all sorts of things that have negatives. There are winners, there have been losers, but I think the market is trying to see through it all. But I guess the one thing I would say is you're going to hear a lot of talk, and I'm starting to hear it about, we missed the earnings recession that was predicted. Yeah, it was probably never really in the cards. Again, when you throw in the fact that markets already saw through that, and the fact that companies tend to beat by a certain margin, that earnings recession call was probably somewhat in doubt anyway. But let's not get carried away. If we're talking about companies that are basically performing flat in terms of earnings growth, you got to wonder where the next leg is coming from. I think the mixed economic news that we're seeing, at any given day, you can see wildly divergent numbers that tell completely different stories about the economy. PMI down and consumer confidence up. How do you necessarily reconcile some of these? And that, I think, provides the thought for going forward is really what are we going to start to see? And I think as we get into the month of May, where you've always heard the phrase sell in May and go away, there are certainly hurdles that the market's going to have to get by, including the tremendous amount of supply coming down the pipe, and probably some rejiggering of earnings expectations for the second quarter. That all remains to be seen. But as of now, the first quarter earnings results have tended to be, if not great, benign, good enough for the market to sustain itself in the short term.